Welcome to this channel. This is emergency mentorship on reverse pattern. This is lesson 1 of 6, double top. In this video, you are going to learn what really makes a trade to slightly form a double top, being aware of the trade by studying price action and knowing the reason why price is doing what it's doing, and also placing your position where banks place their own position, meaning you trading like a bank, not like a retail trader. So this is a transformation video, transforming a retail trader and becoming an institutional trader. So let's get started right now. Let's take a look at this area. Can you see? You have the first swing high and then the second swing high, forming a double top here. Forming a double top here. So let me just write it on the top. Double top. So we have a double top here, the first swing high and then the second swing high. Many YouTubers online, they teach all these concepts without understanding what is really happening in the market. For example, I've watched some of YouTube videos online. What those creators does is just like they are going to draw a neck here. They will draw a resistance line or a support line. I don't know. They will draw a support line here, and then at the end of the day, they will end up calling it neckline. Neckline. So this is the neckline. So after the breakouts, this is what many YouTubers teach on their YouTube channel. So after the breakout, then you are going to be finding an entry. So you're going to enter short from it. Then from there you are going to set your stop loss anyway, without proper money management, without proper risk control. And also they are going to say that take profit from the same level from the neck to the swing high. So they are going to project that line. So they are going to project that line that the market is going to go 100% of it. Can you see? So this is what many YouTubers teach on their YouTube channel, of which they are not aware of what is happening in the market. So the question to ask yourself as a retail trader, what really makes a trade to form a double top? What really made this trade to form a double top right now? What really make it to form a double top from here? Can all see? What really make it to form a double top? So the second question to ask yourself as a retail trader, how do I know that the market is going to form a double top here? How do I know that? You have the first swing high and then the second swing high. How do I know that the market is going to form a double top? I've asked this question from many people trading on YouTube, many people teaching people on YouTube, that how do I know that the market is going to form a double top? None of them know the answer, because they are not aware of what is really happening inside the currency pair I want to trade, or what is really happening in the market. But they teach it on their YouTube channel. So the third question you have to ask yourself, does bank really recognize this double top? Does bank really recognize it? Those are the three questions you have to ask yourself as a retail trader. But the truth is, no retail traders knows the answer. They just believe the market is doing what it's doing. Trades goes up, trades go bullish because people are buying, trades go bearish because people are selling. No, it's algorithm that control the market. Don't worry, you're gonna learn a lot of things from this mentorship, transforming you from retail trader and becoming an institutional trader. So that's just it. So as an institutional trader, what are you going to be looking for in the market? Okay, let me just delete this. As an institutional trader, you have to study what is really happening in the currency pair you are trading. So let me delete all this. Sorry. So as an institutional trader, this is what we do in the market. So let me delete this. So we don't see double top. No, as an institutional trader, we don't see double top. You study what really happened inside the price. You can see from here, we have a nice bullish trend. You have a nice bullish trend from here to here. So what really happened inside this bullish trend? So we study what happened inside the trade before concluding on what to do next, before taking action on maybe the market is going to go bullish or bearish. You understand? We don't just set trade anyhow. For example, the example I use, the former time of which retail traders used to do. You understand? And then what many YouTubers are teaching on their YouTube channel. Before I finish this video, I'm going to give you another example of which the market does not display the way they want it. At the end of the day, they end up taking loss. So you have to study what is really happening in the market. For example, okay, let's do this together. Let me delete this. So we have a nice impulse movement giving us higher high. Then after the higher high, we have what? Higher low. Then we have another higher high. Then we have another higher low. Then we have another higher high. Then we have another higher low. Then we have another higher high. Then what happened next? If you notice this trend, we have this higher low. This higher low does not break this higher low. Likewise, the same. This higher low does not break this higher low. This higher low does not break this higher low. But what happened here? We have a break of structure. Break in market structure. So there's a break of structure here. So let me just delete this so you can see the break of structure line very clearly. So we have a break of structure here. Every single time we have a break of structure in the market, banks are telling us that we are no more going to that direction again, we are going to opposite direction. So as an institutional trader, we have to like to wait to go to where the market has placed their entry to enter the trade with them. That is why you can see this market, this trade has to like to form another swing high here. Just to go and pick banks trade. So banks control the market so that they can enter into the trade. You also like to enter the trade along the side with bank. You can see the impulse movement. You can see this impulse movement. It's bank that drive the market to make the same movement here, to make this movement here. You can see the movement also. It's bank that drive the market, the trade, the currency pair to go higher to this swing high. But there are rules to it. There are algorithms that control this. So every single time you see a break of structure in the market, so banks are telling us that you are no more going bullish, or you are no more going bullish, you are going bearish. So there's a place banks are placed their order. So you also have to place your order in the place that banks place their order. So after that, you can see banks have to retest this level of order block. So you have order block here. Don't worry, I'm going to teach you what is order block in this on this mentorship. So we have order block here. So you're going to set your own entry here. You're going to enter into the trade there, and then set your stop loss there on this previous swing high. Why you setting your stop loss on this previous swing high is the same rule. Every single time markets form higher high, higher low, you can see higher high, higher low, higher high, higher low, higher high, higher low. This higher low is not breaking this higher low. No, it's a rule. It must not break it. This higher low is not breaking this previous higher low. Can you see? So from here now we don't have higher low again, we have low high. So we have this low high, then low low, then we have another low high here. So this low high, we are not expecting the market to break this previous low high. The same principle, the same trend of which this previous higher low is not breaking this previous higher low. So this lower high is not going to break this lower high also. So that's just it. So every single time you see this setup in the market, you should know what to do next with what I've taught you. So where should I set my take profit? That's another question you have to ask yourself. Where should I exit from the market? So when you want to exit from the market, every single lower low is going to turn to a liquidity. That's what banks are looking for in the market. Liquidity. So you're going to set every single higher low. I'm coming. Every single higher low, it's a liquidity. It's going to turn to a liquidity. So you can set your first take profit here. Meanwhile, as a retail trader, they are just entering the market from here because this is where they call their neckline. I think so. This is where they call their neckline. So they're just going to be finding their entry here. Meanwhile, they're already late to the markets, they're already late to the trade. So that's just it. So you can set your first take profit here. But as an institutional trader, you have to like to reference to what is really happening in higher time frame. For example, if I have to like to go back in time, you can see this trade is going what on a bearish direction. Then we have lower high, then lower low, then lower high, then lower low, then lower high, then lower low also. So we should be expecting the market, the trade to go below this previous low here. So you can set your take profit here. Can you see? Close to 1:10. Rather than you setting your entry here. I'm going to give you another example before I finish this video. As a retail trader, they'll set this place as their neck, so they are going to be entering into the market from here. They're already late to the market. So every single time you see this happening in the market, let me just delete this. Sorry. Let me delete this. So every single time you see this happening in the market, every single time you see market breaking structure, so you have to wait for a level where banks have placed their entry. So you have to enter with them, and those levels are order blocks. So I'm still going to show order blocks in my video, on this mentorship on this channel also. So that's just it. So bank brings structure here, telling us that you are no more going bullish again. Now you are going bearish. So you have to wait for a level of which market have to come to. When market gets to that level, then market is going to go bearish. No matter if millions of people are even buying here, millions of people are buying, want to break this the previous swing high. No, it's not going to break, because it's algorithm that control the market. So let me delete this and give you another example here. So let's take another example here. So you can see we have double top also here. You have double top here. Double top. That's what retail trader calls double top. But what happened? What really made this market also to form this is the first swing guy, and then this is the second swing guy. What really makes this market to form another swing guy is coming to the same price level? What really make it to come to the same price level? Can you see? Don't forget what I told you. We have to like to consider what is happening in the past. Market is going what on a bullish trend right now, so forming higher high and higher low. Let me just draw it. We have higher high, higher low, higher high, higher low, then higher high, higher low, higher high. Then what happened? You have a break of structure here, like what I've told you earlier. You have a break of structure here. So every single time we have a break of structure in the market, what you should be expecting and what you should be waiting for is for us waiting for where banks has placed their entry. Let me delete this. So this is where the break of structure is. Sorry. So this is where the break of structure is. So every single time there's a break of structure in the market, because you can see this was the previous swing low. This swing low does not break this swing low. This swing low does not break this swing low. Can you see? It's not going to do that. It's not going to break it, because we have expansion and then retracement. The retracement is not going to break the where the expansion start from. So we have expansion here, and then we have retracement. So this retracement has ended up breaking this this expansion. So this is no longer called a retracement, it's called expansion to the opposite direction. So you have to wait for where markets have to like to form retracement back, and then that is the place banks have set their entry. Place their entry. That is where banks place their position. So you also gonna place your own position here, and set your stop loss at the tip of the previous swing high. Then you are going to exit from the first liquidity, like what I've told you earlier. So for example, if a retail trader asks like to teach you this is just what they are going to teach you. Let me delete all this. So let's take the same example from where I started from. So they call this place their own neckline. Sorry. So they call this place neckline. They call this place let me delete this one. So this is double top now. So this neckline. So what happened? So this is where they are going to enter into the trade. So they'll say their entry here. They'll say their stop loss there. Without no money management, no risk control. They will measure from this distance to this distance as their take profit. So what happened? Markets end up kicking them out of the market because they are not aware of what's really happening in the market. They don't know the reason why market is doing what it's doing. So don't take my word for it. Go to your chart, find every single double top zone, check the previous history of what happened, the previous trend. You are going to see all this setup there, that there's a break of structure in the market. So whenever there's a break of structure in the market, then you wait for the market to retest that particular zone. That's what slightly formed double top. Go to your chart, find this out by yourself. That's how you're gonna know it. So don't forget to subscribe to this channel and also to like this video. So see you guys in my next video. Wish you good luck and good trading. Bye.